Hello traders, today we're going to cover 4 days in a row of using a price action method called the at the open to method. I'm going to show you 4 days, exactly what happened, explain to you a little bit about the system. This is the first method that is taught in our Day Trade to Win program, and for all the new traders who signed up, this is a great review of the last 4 days. It'll be the same as what's on your software. If you have any questions, reach out. All right, let's take a look at day number 1, Monday. This is a long trade. The at the open method is based on price action. We like to look at, as soon as the market opens, the direction of the market. So in this case, it's a long trade at 53.48 quarter on the E-mini S&P. Now you may ask, what is the target and what is the stop? As taught in the course, in the program, we take a look at the ATR, the average true range. Right as the trade fires off, I can see that it's about 2 points. And so how far did the market move from 53.48 quarter? The market moved 3 points. So I think that the target, being very specific at 2 points, it reached its objective. 2 points on the E-mini S&P is going to be about $100. And that's all we could expect out of this trade. It's a once and done trade. Now you can go on for the rest of your day after this first trade of the day. Let's go to the next day. All right, here we are on Tuesday, day number 2 of the week, and it's another long trade at 53.58.75. Again, very simple. As soon as the market opens, we take a look at an opportunity to either be long or to be short and to know the exact stop and target. Now, I look at the ATR, the average true range, which tells me that the market's about 1.5 points. Now, this is a little bit slower, and even though we can use the at the open method on any market, it's always good to look at markets that move. So whether it's a stock or forex or a crypto, make sure that we have some movement. And this case, this is looking at about 1.5 points. The market moved 2 points, 2 points, 3 points. So this being very accurate, it's a high probability trade. Looking at only 1.5 points, it easily made that 1.5 points. Now, if you want to trail a stop, you can, and we teach you, it's included, how to trail a stop in the At the Open program. And we also teach it in mentorship, so you can definitely trail a stop. But for our purposes, I could only expect the market to move 1 times the ATR, which is very simple and does tell me exactly what to expect. Let's take a look at day number 3. All right, here we are at day number 3, Wednesday, and this is another long position. So it's been long on Monday, Tuesday, Wednesday. 54.42.75 is the entry. Now, in this case, even though the market went much higher, it took a little bit longer than we typically like. So the market moved about 5 points. Again, what is the target? What is the stop? Typically, we like to look at the ATR, which in this case is about 2.25 points, 2 points, and the market moved about 5 points. Now, per the rules, we like to have what's called a time-based stop, a time element on how long to stay in a trade. Typically, it's not more than 15 to 20 minutes that we're in a trade. So within 15 to 20 minutes, I want to make sure that I have the profit made, or if it's not, if it's a losing trade or break even or a small win or a small loss, I close the position and I get out of that trade. So in this case, if you started to see the market go down and then started to go up, and you say, I can get out at a break even, take the break even. I don't think there's anything wrong with that. It eventually did make the full target and even more, and it was only between 9:58 and 10:15. So it's about 15 minutes. So that would be the maximum amount of time I would hold on to this trade. And so even though it was a winning trade, holding it for 15 to 20 minutes, I would definitely say, especially for the new traders, if it goes against you and comes back and gives you a break even or maybe a few ticks of a winner, take that and get out of the trade. So Wednesday is a winning trade or even a break even trade. Let's go to today, Thursday. Let's see what happens. All right, here we are on Thursday. Now this is a short position, and there's actually two short positions. So the at the open 2 strategy gives you two specific signals. The first is the main signal called the ATO. The second is the ATO called chase the trade. Now the reason for this is sometimes the market runs away from you. And so we call it the chase the trade because we're actually going with the momentum in the same direction that the market may be moving, very strong, under higher volatility, or even during a news event. So we have here two opportunities to go short. One is the main signal, 54.34 on the at the open 2, and a chase the trade of 54.30, which both were successful. Now I don't want you to take both. I only want you to take one trade to the short side. So my goal isn't to take both of these. My goal is to take whichever happens first. If I take the at the open, or if I take the at the open chase the trade, take whichever one occurs first. Both were successful in this case. Now if you look at the ATR, the target, let's say it's 2.5 points, so you're looking at about 2.5 points. Market went much stronger. The market has been very strong lately, so there's no issues. Remember, we're not holding a trade more than 15 to 20 minutes, and this would be a clear winner, whether it be the at the open or whether it be the chase the trade. Either of these were good. If you have any questions on the at the open, if you'd like to get the at the open software, and it's included with mentorship, visit DayTradeToWin.com, give us a call, send us an email. We're happy to explain to you how the programs work. Until next time, good trading. If you like these videos, subscribe to the DayTradeToWin YouTube channel. Click on the links below to get free access to our member account area. We got some free software, the ABC and the news indicator. And watch the next video if you really want to learn more on trading price action.